welcome to China Money Podcast, your source for local knowledge and insights on investing in China. Go to our website, ChinaMoneyPodcast.com for more great episodes. I'm your host, Xiang, and our guest today is Nick Cao, China Head of Investment and Capital Transaction at global property consultancy Knight Frank. He's talking to me today at the New Heights Restaurant and Bar at number 3 on the Bund in Shanghai. Hi, Nick. Welcome to the podcast.
Thank you.
Since the government launched home buyer restrictions in early 2010, China's residential property market has been going through a downturn, but the commercial property sector has been going through an explosive growth period. Some people are concerned about a bubble. Are you?
It depends. I would say China's commercial property sector has been less developed compared with residential and other sectors. After the government putting the controls on the residential market, people start seeing more investors or more interest moving towards this commercial sector. But I think we need to see two different groups. One would be the larger developers in China. They actually, even before this government controlling policy come out, they already start moving towards this commercial sector. And some of the groups, I would say, they are forced because they can't do. Basically, the sales of residential has been stalled. So I wouldn't say it's a bubble because in China, actually, we lack of lots of good quality commercial assets.
For the past couple of years, transaction volume in the commercial property sector have doubled. Do you see that continue?
I would say yes. Yeah, because I think today, even whole China's economy is restructuring from manufacturing basis to modern service sector, and this generates large demand of office spaces, especially in some of the old industrial cities. There wasn't any office buildings before. Even some must be stranded or sold, very local quality office. Even some international companies expanding to some second-tier cities in China. So that generates demand. Also, government is promoting the domestic consumption. So that leads to a large demand of retail.
There are often reports about ghost shopping malls across China. But you think that's not the mainstream? The fundamental for the commercial property sector is still strong demand driving up supply.
I think when you're talking about ghost shopping malls, I think you still need to look at it case by case. I think in China, even you look at all these tier 2, tier 3 cities, you hardly to find really good quality shopping malls. But still, some of the shopping malls are just vacant. That's because of in this city, the owners, developers of this commercial property, they don't have management expertise. They don't have experience. They don't understand how to run these shopping malls. Take an example of Xiang. You look at Xiang today, most investors say they're very cautious about the city because of oversupply issues. Within 2 kilometers distance, you will find 10 large-scale mixed-use projects. So that is quite scary.
So where do you see attractive investment opportunities right now in Chinese property sector?
I think today the opportunities mostly come from tier 1 and tier 2 cities. In tier 1 cities, the problem is very short of supply. Foreign investors are not allowed to buy asset, so they only can buy the offshore equity, holding structured property. So these property are very limited supply and has been acquired by investors already. So most of these supplies are actually coming from tier 2 cities. The really are very limited competition in retail sector if you are very strong running a retail mall. In tier 2 cities, you could get 8% yield for retail properties in good location. Because at the moment, the price level in tier 2 is far below tier 1 cities. That means that there is a large room of appreciation.
Thank you so much for your time.
Thank you.
That's today's podcast. I hope you enjoyed it. If you have any questions or comments, go to our website, ChinaMoneyPodcast.com. Like our Facebook page or follow us on Twitter at ChinaMoneyPod. Thank you so much. Until next time.